Hey everybody, so let's just talk about CrowdStrike earnings real quick. So in the after hours, it's down quite substantially, down about 10.5%, give or take a few. So, it's down about $17 here. Now let's go ahead, take a look at the earnings report. So earnings were today, and let's just take a look at the highlights. So it says right here, total revenue was $692.6 million. That is a 42% increase compared to $487.8 million in the first quarter of fiscal 2023. Now also note right here, it says first quarter fiscal 2024. So they operate off a different fiscal year than our calendar year. So they are ahead of time. Now, if we're looking at subscription gross margin, that's GAAP subscription gross margin was 78% compared to 77%. So this actually went up, so that's a good thing. Now, income/loss from operations. So GAAP loss from operations was $19.5 million compared to $23.9 million in the first quarter of fiscal 2023. So, they're having a net operating loss. So that's not necessarily a good thing. Now, if we're looking at net loss or income attributed to CrowdStrike, it says right here, GAAP net income was $0.5 million compared to a loss of $31.5 million in the first quarter of fiscal 2023. So you would think that this is exceptionally good. But, I'm going to go ahead and talk about why this is kind of a fluke. And if we're looking at cash flow right here, it says net cash generated from operations was $300.9 million compared to $215 million in the first quarter of fiscal 2023. And free cash flow was $227.4 million compared to $157.5 million in the first quarter of fiscal 2023. So overall, cash flow is positive. So that's a good thing right there. And we'll talk about this a little bit more in detail. So, let's just skip all the way down to the financial statements. So here is the statement of operations. So we're looking at 2023 versus 2022 for the 3 months ended April 30th. These numbers are in thousands except per share amounts. So right here, this is 651.175 million. So here, we can see revenue that increased. But if we're looking at gross profit, that also increased as well. Now, if we're looking at operating expenses, operating expenses exceed gross profit. Therefore, you get a loss from operations. So right here, you guys can clearly see. Let me just zoom in actually, so you guys can see that a little bit more clear. So right here, you guys can clearly see total operating expenses and then loss from operations. So in both years, same quarter, we have a loss from operations. Now, here's the funny thing. So when we go over and we look at, net income, it's positive right here. So we have to look at what is making this positive. So right here, we have this line item. It's called interest income. So interest income is not necessarily part of their operations. This is just how they're investing their money. So it's not directly related to them selling and buying and selling services or buying and selling merchandise or whatever. So, this is almost separate from their actual operations. That's why it's listed separately. So if this was actually part of their operations, they would include it into their revenue. But here, they list it separately because it's separate from their operations. So the only reason why they are GAAP positive is because of this interest income right here. So, overall, if we're looking at diluted EPS, it's basically 0 because it's so small when we're actually dividing it by the diluted shares outstanding. And here's another thing. If we're looking at diluted shares outstanding, this increased quite substantially too. Let's see, that's almost like around like 5% increase in shares outstanding. So that's not a good thing. That's dilution. You don't ever want to see that. So that's not a good thing, especially when they have a net operating loss right here. So now let's go over to the balance sheet. So if we're looking at the balance sheet right here, current assets, this looks good. We have a lot of cash and cash equivalents. That's about 2.8 billion. So that's pretty good right there. Now, if we're looking at total current assets, that's about 3.7 billion. And if we're looking at total current liabilities, let's see, total current liabilities is about 2 billion. So this is almost 2x. So 2x current assets to current liabilities. Now that's a pretty good thing because that just means that you have a lot of cushion. Now if we're looking at stockholders' equity, which is basically just assets less liabilities, total stockholders' equity, that's about 1.634 billion. Now that's versus 1.487 billion the last year. So this is a good thing to see equity go up. But, there's always a but. The but is that, the shares outstanding have increased. So, when you see shares outstanding increase, that's usually because you're just doing a direct offering. And when you're doing a direct offering, you're increasing the shares outstanding in return for cash. Or, this can be some sort of converted debt. So you can have like convertible senior notes where basically, you could convert that debt into equity. So that's also another form of dilution. Or you could have stock-based compensation where you are paying your employees with equity. So that is also going to increase the shares outstanding. So that's never really a good thing. So, right here, their cash position is increasing because, we did see up above that they did have positive cash flow, but it's at the cost of dilution. So that's not necessarily a good thing. So you always got to be wary of that. So if we're going over to the statement of cash flows right here, you can see that they do a reconciliation. So essentially, they're converting GAAP to cash basis. So here we have this net income, which is following GAAP, and then they add and subtract all these different things. So things like amortization, that's not necessarily a cash expense, so they add that back in. Things like stock-based compensation, that's not necessarily a cash expense, so they add that back in. So right here, we can see about $130.85 million went into stock-based compensation. And that's just for this quarter. So that's quite a bit. Quite a bit of money is going to stock-based compensation. And that number actually increased from 2022. So this is where you're kind of seeing a lot of that dilution go on. Now, if we scroll down, we can see that net cash provided by operating activities is positive. So, when you reconcile all this stuff out, they actually have positive cash from operations. Now, purchase of property and equipment, if you take the net cash provided by operating activities and you subtract the purchase of property and equipment, that's going to give you free cash flow. So right here, if we're just looking at these two numbers, free cash flow is positive. So, obviously that's a good thing. You want free cash flow to be positive because that allows them to do all sorts of different things. So, they have money to reinvest into their company. So that is a good thing right there. But like I said, it's at the cost of dilution, which, we can see right here from stock-based compensation. So overall, when we go down the line, we can see cash equivalents, and restricted cash beginning of period. That's about 2.456 billion. And then at the end of the period, it's 2.831 billion. So overall, their cash position did increase. Now you're wondering, okay, well, why is the stock down? A lot of this stuff seems good. Well, here's another question for you. Right here, if we're just looking at the beginning of May, CrowdStrike was trading around $115. Now it's at $160. So that's like a 50% increase almost. So, here's a better question. I mean, the better question is, why did we go up 50% in basically 1 month? Is a little pullback like this even a big pullback? Quite personally, to me, it's not really a big pullback because we went almost 50%. Now we're just pulling back about 11.32%. So to me, no big deal. I don't necessarily think that CrowdStrike is an amazing company, but I don't necessarily think that, this sell-off is unwarranted given, the massive rally that we had in just 1 month. So hope you guys enjoyed this video and have a good one.